All right, what we'll do is we'll shift gears and focus on the FMCG space, where second quarter earnings, at least from staple companies, looking at commentary, etc., is not looking all that great. We've Abneesh Roy, Executive Director, Institutional Equities at Nuvama Group, who formerly known as Edelweiss Securities, joining in. Abneesh, great to have you with us here. Thank you very much. Is that the broad kind of look in that staples are going to have a pretty tepid kind of quarter? There were a lot of expectations that with commodity prices coming off, it'll provide a margin tailwind, etc. But recent commentary doesn't kind of indicate or point to that. Your sense?
Yeah, thanks. Yes, we do expect profit booking in the staples names around 5 to 7% in the near term. Next 1 month, the results will be weak for most of the staple companies. We still expect Asian Paints and ITC, Pidilite to do much better than the FMCG staples companies. See, FMCG staples companies have seen 3-4 key issues in Q2. In terms of rural demand, still there is no recovery at all. I think only noodles and biscuits is seeing recovery because of downtrading. Second aspect is in Q1, if you see, the base was favorable because of COVID in the base. Now that is not there at all. So Q2, the base is normal. Also in Q1, the summer portfolio did really well because of very harsh temperature, which is not the case in Q2 at all. Third point is on the international business. If you see wherever there is a UK exposure, Europe exposure, clearly margins will be impacted significantly. So such companies will see international margins really come off significantly. So on a margin basis, the question which you asked, I think that was not really a concern expectation in Q2 because there is a lag of 3 months. And of course, a lot of companies have built up inventory in the anticipation that crude will move to 150, 170. But H2 is where we expect. See, HUL has cut prices in soaps detergent. So there is some concern also on that now crude is coming back 13%, rupee at 82. But I think still H2 will be better in terms of margins, but stocks could cool off in the near term.
Okay, what about on Dabur? Your thoughts on the business update and the way forward for the stock?
Yeah, Dabur, if you see in terms of the portfolio, Q1, there was an adverse mix in the base because of very high Chyawanprash honey. Q2, that issue is not there. But on the other hand, fruit juice business saw very strong growth in Q1 because of harsh summer. In Q2, that is not there. So on an overall basis, international business of Dabur will grow faster, but because of the forex and currency translation, there will be lower growth. So Dabur currently will be lower in terms of our pecking order, because if you see commodity-wise also, HUL, Britannia, Godrej will see more expansion in H2 because of the palm oil correction. Dabur, if you see, is very diversified. So Dabur will be slightly lower in pecking order, but in H2, we expect recovery in the rural demand, and there should be some improvement in margins because of the packaging cost.
Yeah. Other than that, Abneesh, in your coverage universe, what are you most excited about? Which are the names, in terms of earnings potential, valuations? Where are you seeing the maximum upside?
Yeah, as I said, near term, there could be 5-7% correction in the staples names. That will be the right time to increase exposure to HUL and Britannia. Britannia is one of the few companies where demand recovery has already started. Apart from that, ITC, Asian Paints will see very strong set of numbers. For Asian Paint, we expect 75% plus kind of a EBITDA growth. That's because the base margins are very favorable. Titan, again, if you see, the commentary was very positive, clearly very strong set of numbers. We were expecting around 10% jewelry growth. They have delivered 18% sales growth in Q2.
Okay, what about GCPL? Of course, Titan's numbers actually looked very good. On GCPL, the commentary was a bit weak for the industry as a whole, but the company says that consumption will improve in the second half of the year. As an investor in the stock, what would you do?
Yeah, second half consumption recovery, I think every company is currently expecting that. That will also happen because in H2, the base of the rural really turns favorable. So even if nothing changes, because of base, the growth will come back. Second is in soaps, if you see, price cuts have started. The grammage addition has started. So that will also help the volume growth. On the gross margin, my sense is clearly GCPL will see very strong expansion in H2 because palm oil is now almost half. They are flowing back a bit to consumer, ad spends will go up. So on the EBITDA margins, GCPL may not see much of an expansion because they want to increase ad spend. So net-net GCPL has to be seen more from a one-year perspective. But yes, Indonesia continues to remain a concern for us. But on the India part of the business, Africa part of the business, a lot of the concerns are getting addressed.
All right, Abneesh, thank you very much for your time. Great speaking with you. And, good to get that perspective. By the way, Jaiprakash Associates has announced the board has approved the divestment of significant cement business.